Hello, I'm Dean Mitchell and welcome to the Executive Corner, and this is Expert Talks, a 20-minute roundup where we bring to you industry leaders, successful business owners, market and equity advocates, all under one roof to help you discover the insights of stock and business market news and help you to understand how one can create multiple passive income streams. On today's show, we have Ms. Bronwyn Knight, CEO of Grit Real Estate Income Group, which is a company headquartered in Mauritius with a focus on Pan-African countries. Welcome, Bronwyn.
Thank you. Thank you for having me, Dean.
It's a pleasure to have you with us. Now, let's get straight to it. Beginning by asking how the company has been coping with the pandemic and what would you suggest to other companies faced with such circumstances?
From a pandemic perspective, I think a magnitude of corporates have been taken by surprise by just the global impact of what we've seen from the pandemic itself. So really, to put it in the context of the markets that we operated in Africa itself, what we have seen is that we have had to really adapt to countries and the behaviors of regulators in countries to an epidemic of this nature. So what we've seen from a business perspective, remembering that we commercial real estate, we invest in 8 African countries across Africa, is that we've had to really work very closely with both of our tenants, our stakeholders, our financiers and our investors, really to get people to understand that even though that there's been a major change in the market, in these markets, that there is an ability to get through some of these challenges that we see. So we've really had to focus on what has performed still relatively well, and then also really just focusing on how we can assist people to really try and get through this interim period over COVID.
Your latest results depicted a resilient portfolio that led to dividend resumption. Can you please shed some light on your financial performance of H1?
So, remembering that we invest in emerging markets, so we haven't seen a lot of the countries in Africa actually go into as stringent lockdowns as what you would have seen possibly in Europe and other countries, which means that industry has been able to resume back to normal quite quickly. We have a very diverse portfolio of assets, so our asset classes around offices, light industrial, corporate accommodation to embassies have had actually very little impact. Offices have behaved differently in emerging markets because people have been quite eager to return back to their workspace because there hasn't been infrastructure at their residential homes and that. So we've seen partial lockdowns of 2 weeks and then offices actually been returning back to normal. So what that has ensured is that we've had around 60% of the portfolio actually been resilient and countries that have gone into very minimal lockdowns. So we've actually seen those asset classes continue to perform, which has been interesting. And I think having a very diversified portfolio, also having an emerging market portfolio, whereby there's a big focus on growth, has shown quite a bit of resilience to the Grit portfolio over this period.
The company's plan is to gradually reduce exposure to the retail sector. So apart from healthcare, which are the other sectors you are going to be focusing on?
So what we're seeing is that, I think we've obviously seen challenges across retail globally. So we still see some traction with retail, what we call a more convenience type retail, big box type retail, supplying the end user the needs of obviously the African people. But what we're seeing from an asset class focus point is that the team is really much focused around light industrial. So as you can imagine, in emerging markets in Africa, there's a very big need for product and distribution across a lot of these jurisdictions. So light industrial is a big focus point for us. We've got a lot of embassy type stuff. So we are a major landlord to the American embassy across Africa. So embassies are very resilient because obviously they continue to operate and exist even obviously over the pandemic itself. And we're their real estate partner. And then the third asset class is data centers. So we've seen telecommunications actually be more successful over this period, because there's been even a bigger need for communication and the ability for data centers, etc., etc. So telecommunications and data centers are also a third asset class. So because we are multi-geographic and because we are multi-asset class, it gives us flexibility to now say, okay, what has been resilient? Where do we see the growth? Where do we see the growth in these particular regions? So it's allowed us to sort of move the strategy really focused around those asset classes.
That's fascinating. Grit has joined the premium listing segment of the London Stock Exchange. How is it going to help the company take its growth to the next level?
So the capital structure is obviously really important, and having an Africa business, there's always these misconceptions, and sometimes it is reality that governance is a big hindrance around emerging markets. So the idea to bring Grit to the main board in London was to ensure that if an investor is looking for emerging markets investment, they're able to use Grit as their conduit, and that it's gone through the most vigorous of governance structures. So the idea now is, on the premium segment, the ability to create liquidity, get into the main FTSE, or have the ability to have access into the main FTSE, which will diversify the share register. And also with guys that are not getting growth out of developed markets, Grit gives them a great alternative investment for growth into a market like Africa, but a fairly mitigated risk platform to invest through.
How has been the rent collection amid the new COVID-19 restrictions, and what are Grit's plans to improve the collection?
So we've actually sat in a relatively fortunate position. Over the period, we've collected over 90% of our rentals, and that's driven by our asset class itself and what we've seen from a resilience perspective. So because we've seen a lot of our tenants going back to business as usual, obviously that's aided the rental collections. I mean, the idea is that we should be collecting 100% of the rental, but we all understand where we're sitting from a pandemic perspective. So some of our hospitality tenants have needed a cash flow reprieve as some of these markets, including Mauritius, where I am based, need to reopen. So we really see that some of these markets like Mauritius really reopening around September of this year, that we should be getting back close to that 100% collection by the end of this year.
Can you please elaborate on the company's asset recycling initiative and how is it going to benefit from it?
So for us, we've been very vocal even pre-COVID that retail, because we've got a diverse portfolio across the whole African continent, takes up a lot of management time. And also the fact that we want to be focused more tenant-driven, single tenant to triple net type buildings. So the asset recycling that we're looking at on the retail will allow cash flow to come into the business. We want to be able to drop our loan to value because valuations have had quite a bit of a hit over this COVID material uncertainty time. We've obviously seen an uptick in loan to value, so we want to use that to reduce our gearing, and then just put it into the pipeline and opportunities. Being in emerging markets, we have no shortage of pipeline or opportunity. And now it's just be able to use the right type of capital to effectively grow the business.
And finally, what are all of your future plans and what can we expect coming out soon from Grit?
So for us, obviously going through the main board London listing, remembering that we were a business at an asset value of over $130 million 6 years ago, we now sit over $850 million. The opportunity for growth is there. We've had to sort out getting onto the main board in London. We've had a lot of good shareholder and funding support. And now we've spent time really around consolidation, asset management, looking at actually driving the performance of the underlying portfolio, which we've actually seen, even though we've been sitting in COVID over the last period. And now it's really to say, what is the next phase of growth? And how can we optimize on the opportunities that we've seen coming out of a distressed situation as of COVID? And there's a huge amount of opportunities of consolidation and a number of growth opportunities for the group.
It was great chatting with you, Bronwyn. We thank you very much for your time. And with that, I'm Dean Mitchell. This is Kalkine. Please watch this space for more. Till then, stay appraised and invest wise with Kalkine.